Very good morning to you and welcome to TIO Markets Daily Market Commentary with me, Jan Motat, Chief Market Analyst for TIO Markets. And as usual, please remember that we do not provide investment advice. So, in market news today, we have ADP report that disappointed yesterday at 428k, while the consensus expectation was 1250k. So this might be an indication of maybe the real number, the real NFP number that is provided by the US Department of Labor, that might be undershooting the expectations tomorrow. So let's wait and see. Let's wait and see how the markets react to the number that will be confirmed. Now, today we have more unemployment news. We have the unemployment claims coming in at 9. Expectation is at 955k. So that would be slightly down. Good news if that happens. And then there'll be the US non-manufacturing PMI a little later on today. And the expectation is that the number will come in at 57, while the previous number was 58.1. Now, even if the number will be a notch lower than the previous one, this is still good news because economies are deemed to be expanding when the PMI number is above 50. And why is non-manufacturing PMI important? It's really because the services sector is about 67% of the US GDP. So whatever happens with the services sector has a tremendous impact in the US economy. Fed's Mester was quoted, and I think she works for the Cleveland Fed. She was quoted saying that the recovery is fragile, but there'll be growth in the latter part of the year 2020. She sees employment being in high single digits by the end of 2020. And yeah, she probably is going to be right about this. Things aren't going to be changing that much in just a few months. Stocks kept rallying yesterday. We had materials sector leading the stocks earlier. Over the, say, last 10 days or so, the money has been flowing more into the materials stocks than any other sector. And just over the last 2 or 3 days, we've seen utilities sector, which is usually associated with safety. That has been attracting buyers, attracting money more than the other sectors lately. So we are probably seeing some safe positioning now ahead of the NFP tomorrow, NFP numbers. So yes, let's go and see what the charts look like. Just a moment and I'll bring up the charts. Okay, let's take a look at the stocks first. Here we have the equity index futures, and as you can see in these weekly charts, S&P has been running higher for 5 weeks in a row. It's the 6th week of this bull run going on at the moment. So there has to be a pullback at some stage, even though I wouldn't trade against any market that is rallying like this. It's better to go with the flow. Then with the E-mini futures on Dow, we are still below the this year's high. So that shows you the difference between the technology stocks. Now at the moment, technology sector is very heavily represented in S&P 500, but the sort of old industry stocks, industrial stocks are still below this year's highest values. Now, with the other markets, let's go to the daily, and actually I want to take a look at the Dow, because Dow is still a very important market. It's a very important indicator, although Nasdaq seems to be leading the markets at the moment, the other markets. But let's take a look at what's happening with the Dow. And here, if I'll make this a little bigger for you so you can see it better. So if the market corrected lower from here, then we would have 23.6% Fibonacci level there around 28,390 and a potential support there. So this area is certainly worth following if the market retraces back to these levels. And in Nasdaq, let's go there, and I'm gonna make this bigger as well so it's easier for you to see. If we check where the potential retracements and supports are at the moment, the 23.6, which is the first Fibonacci retracement level, is there at 12,083, and just below at 12,046 we have a potential support level. So this area is worth keeping an eye on. With the Nikkei, we talked about this a little while ago when it was in the news that Buffett was buying very significant chunks of Japanese trading companies, and I was talking about how it's usually a little tricky to go and try to buy right at resistance, but this time that would have been paying off, and the market moved beyond the level. So whenever you have a bullish market, try to find opportunities after pullbacks. That's more safer. If you know what you're doing, it's obviously okay to go and find a smaller time frame setups, but they tend to be more risky, so be careful. What else? With the Hang Seng, we are looking at a market that has not been relatively as strong as many of the other markets, so there's risk there. But if this continues, there's some attempt to take this higher. So I'm a little cautious if there is a market that hasn't been performing with the others, and then if the bigger, sort of more powerful markets start to react lower, then it's more likely that a market like this will follow in and break some of the supports. But if this development continues and if we see a rally from here, then especially above this 25,184 level, and these are obviously futures levels, so CFD prices might differ. So if we get a rally above this, then there could be some space going all the way up there to the recent highs. Let me just draw a line there to highlight the area of 25,790 roughly. So if this is taken out, then the probabilities of the market moving to 25,790 or thereabout increases. But then in the currencies, which I wrote about in the report today, let me bring the currency charts up just a moment. Actually, before going to the live prices, let me remind you of this. If you type in tiomarkets.com/analysis, you'll find all my latest articles, and it's obviously important to go and review the past articles so that you can know the quality of my work and see if my analysis is worth following. I claim it is, but you need to verify it, obviously. Now, in yesterday's analysis, I was suggesting that if we go, I think it was this yesterday, yeah, we had US manufacturing PMI supporting the USD, and I was saying at the time that we expect the market now to move lower, and when it comes to this area, this confluence area where we have the 23.6 Fibonacci level, we have the channel low, we have this 1754 support here, all these coming together. So we suggested that the price is likely to move there. Obviously, we don't provide investment advice and we don't tell you it's gonna go there, but we're saying the probabilities are that because of such and such, because of this lack of momentum in Euro USD because of the dollar strength across the board, it was likely that the market would move lower. And the other market I was looking at was cable, pound USD, and both these markets have now retraced. First, Euro. If you look at these, that's where the market was yesterday at the time of my analysis, and now it has moved here. Obviously, I don't know yet if the market will turn higher from here, but it's already reacting to this level. So if you go to intraday timeframes, you can see that some buying in came in here, and the market is at the moment in this 4-hour candle moving higher. If that's going to last, if it's going to take out this resistance here at 1820 or so, that remains to be seen. But that's where you can learn. I mean, that's where you need the intraday trading skills. And if you come to my webinars, I'll teach you a lot of different ideas that are valid for market analysis and trading. So come to tiomarkets.com/webinars and I'll show you more on how to approach these situations where you see the market coming to a potential level and then providing trading opportunities. The other market I was pointing to yesterday is cable. The market has retraced to this recent high and it's fairly close to 23.6 retracement and the 10-period moving average, and also the sort of medium-term channel low here. So this is a potential area for intraday trades or maybe even swing trades, depending on how the price action plays out and whether the market participants actually will be waiting for the NFP numbers before they make any big moves. We don't know the future, but we can trade what we see. There's a very good saying in sort of trader lingo. The saying goes something like this: don't anticipate, react. So don't expect the market to do something and then try to force your idea on the market by trading it. Rather, react to what the market is doing, read the different time frames, and then if you don't know how to do this, come to my webinars and I'm more than happy to help you. The next webinar we have coming up, I think it was tomorrow. Yeah, tomorrow, Friday at 3 p.m. GMT. So let me just display that for you. So tomorrow at 3 p.m. on September the 4th, not the 14th, even though the slide says the 14th. So tomorrow, September the 4th, 3 p.m. GMT, I will be speaking on how to survive and how to thrive in trading. The part 1 was earlier, and in this part 2, I'm going to cover the elements of a good trading system. So make sure you go to tiomarkets.com and register for this webinar. I'm sure it's going to be a big help to you. And I'm looking to have many of these webinars with you in the future so that I can support you in your growth as a trader. So thank you so much. Trade safe until we meet again. And I look forward to seeing you in my webinars. Lovely. Take care now. Bye-bye.